Hello dear traders, let us review the events of the past week. US stocks edged higher on Monday, helped by better than expected corporate reports, but the gains were limited by falling commodity prices. The dollar strengthened. The US dollar index closed up 0.17%, hitting a 3-month high in intraday trading. The S&P 500 ended 0.1% higher at 2128.27. Gains in technology companies helped Nasdaq close at a record high for 3 sessions in a row. European stocks rose for 9th straight session after Greece had agreed last week to austerity measures demanded by Eurozone creditors for third bailout package. The Stoxx Europe 600 index rose 0.3%, Germany's DAX 30 index was up 0.5%, and France's CAC 40 gained 0.4%. On Tuesday, the US dollar index was down 0.7%. It had risen 8.5% since the beginning of the year. Oil prices fell after closing higher for the first time in 5 sessions on back of weaker dollar. However, the futures then start pulling back. Investors were waiting for crude oil inventory data from the US. Gold prices had been falling for 10th session, breaking below $1,100 an ounce, as investor sentiment toward the safe haven metal turned bearish on expectations that the Federal Reserve would raise interest rates this year. Nikkei rose 0.6% on Wednesday as yen weakened and investor optimism was buoyed by strong performance in retail and hospitality sectors. European stocks fell for the second session as slumping commodity markets and disappointing corporate reports undermined investor confidence. Grain futures retreated due to good weather in the US. The weekly drop in corn prices could be the strongest since July 2014, while wheat may fall to its lowest since this May. Sugar futures had been rising for 2 consecutive days. The Brazilian Unica Industrial Group reported contracting crops due to rains. It said that sugar production may drop 17% in July. Global stock indices retreated on Friday. We assumed they were driven down by negative macroeconomic data from US and the European Union. New home sales slumped 6.8% in June to their 7-month lowest. Industrial PMIs in European Union, Germany and France turned out to be worse than expected. This week, we would like to draw your attention to Federal Open Market Committee report on Wednesday and American quarterly GDP release on Thursday. This data may determine the market sentiment for the next month. At the moment, we observe a steep drop in new home sales, indicating economic slowdown in the United States. Taking into account the optimism about the Greek issue, we would like for you to consider the opportunity of opening a long Euro-US dollar position. This was all for the past week. We wish you ample volatility and happy trading. See you next week.